Good evening, everyone. Welcome to another video. Guys, we're going to get right into it. First and foremost, if you can hit that like and subscribe, that would mean a whole lot. Second, guys, feedback is just amazing. So we're going to spend some time today on this video really diving into some due diligence and three picks that I think, well, two picks I want to say that I'm very confident in, and one that was mentioned on a comment, so I really want to, and I've definitely heard of this stock. So let's get right into it. So Warner Brothers Discovery Inc. This is a stock that I'm big on for a few reasons. And first and foremost, guys, I want to dive into their financials. Accounting is not something that I've been showing much of on this channel, so I really want to put in a disclaimer in itself saying that accounting is very, very important. Okay, so looking at Warner Brothers Discovery, all right, their total revenue right now is 38 billion, and just kind of been floating around the 38-40 billion for a while. Cost looks like it's going down. I'm hearing that they're going into more streaming as well, so that's a really good thing. Sorry, there's like a bug flying around. Operating expense, right? So if you were to look at the accounting on it, right, it just looks good. And I really wanted to highlight the cash flow. Just their operating cash flow is $5 billion. So just really good financials, right? If you look at this company for the cost that it is and what they generate, I think it's a really, really good opportunity. They've kind of been hovering around 18, 19 for maybe a good, 10 days now. So that's good news. So just watch out because there's some news exactly that in the works. So if you look into some things that might be upcoming, they are still planning on separating into two independent companies by 2026 and possible merger speculation with Paramount. So I think that's initially what got the boost was the merger speculation. Which took it from it was $12 to almost 20 in a few days. So just really, really moved. If you had options calls, that was a good time for you. So again, planned split into two entities, Warner Bros. And Discovery Global. Now, how that works, I believe last time they did it, you kept your it was AT&T and Warner Bros. Discovery. You kept your AT&T shares, if I'm not mistaken, and then you got that same amount for Discovery when they split. Correct me if I'm wrong, guys. I could be wrong on that. But nonetheless, I think it's going to be a good deal for investors. All right, so again, if you've watched my videos, guys, I've mentioned I love Lord of the Rings, so I think that's going to be a big lineup for them. Batman, I heard that they also just landed some contracts. So sorry, I was looking in the NBA news, but yeah, definitely just in my opinion. And guys, layoffs are actually, in terms of an investing standpoint, they're actually not bad because you're cutting costs. So I know that's very controversial, right? Like jobs being cut off, that's horrible. Like people are losing their livelihood. But again, speaking from an investment standpoint, that's the company saving money. So that's Warner Brothers Discovery. Very, very confident with that one. Another one, guys, is Invz Technologies Limited. Now, this is going to be a different situation, right? Because you look at their financials, and hopefully they surprise me. Nope, they didn't. Okay, so they're, of course, they're not profitable. Okay, and they're operating in a negative cash flow. Okay, so they are, basically not making money. That's gonna change hopefully very soon. Well, in the soonish timeline, I'm gonna be honest with you, maybe 2026, 2027, right? But everything else, guys, is just good in terms of news. Okay, so there's a saying, right? Buy the rumors, sell the news. So there's a lot brewing with Invz, right? Just today they enhanced its automotive tier. I need to read more into this, right? But they had a good certification for testing. Okay. They also were upgraded recently by Goldman Sachs, I believe, who initiated a buy. I believe that's what happened recently. So I know it's kind of like, well, there's just not a whole lot going for this company, you would say. Well, no, they're entering a sector which is going to be very, very lucrative in their industry. The one thing I will say, guys, is it's an Israeli-based company. Okay, I want to give you guys as much information as I can. So just do your own due diligence, okay? Because in my opinion, with the current administration that we have, the American companies are going to be the most beneficial from what's going on with the administration, or that are going to benefit the most, sorry. But Israel is a close partner with the United States. So in my opinion, technology is big in Israel. They're very underrated in that aspect. So let me know. Let me know what you guys think about Invz. Now, the share price being what it is, a little bit cheaper, you guys need to be a lot more careful because, again, they don't have the foundation that a stock like Warner Brothers has with their cash flow and all that. So you just need to do your own due diligence. So now I'm really excited for this next one because I've really not gone into this at all. All right, so we're gonna do accounting, we're gonna do news, and we're gonna do chart with Celsius Holdings, ticker CELH. So again, shout out to Jake, if I'm not mistaken. Hopefully I'm getting that right. Keep them coming, my guy. So cash flow, okay, you love to see it. You love to see it, all right? At least from what I know. Again, if you guys have something to add, right, investing cash flow, I would love to know what that is. Net PPE, okay, net purchases. Sorry. Okay, I don't know what that is. If someone could explain that, that would be crazy. But nonetheless, their operating cash flow is 236 million almost. Good free cash flow, all right? Debt, no repayment of debt. Okay, so they might be debt free. Don't quote me, but they might be. All right. Let's see. Cash flows growing year after year. Did we just find a diamond? Okay, so I want to before I continue, guys. One of the first rules I heard of investing, and I haven't abided by it as much as I should, but one of the first rules that I heard was invest in things that you personally own. I've had a Celsius. This is the drink company, right? Yes. Okay. I have had a Celsius before, and they are very good. So I have bought them before. So if you are an investor of Celsius, then you should probably be buying it. Or sorry, let me flip that. If you are buying Celsius, you might as well invest in it, guys. And the statistics behind it are looking really good. So let me know what you guys think about that. This is something interesting. Okay, so let's see any news. Sorry, I kind of blanked out there. Okay, top analyst calls. Buy, okay, upgraded. Okay. I mean, overweight, okay. Well, like, why not? Why not buy it right now? All in on Celsius or what? Nah, but honestly, that's a good, good financials, good news. Let's look at the chart. Okay, so let's see. Okay. So watch it to move. I mean, honestly, I feel like it's in that next zone again. I mean, it broke that bar right there. So I don't know. I just feel like momentum is upward, and I mean, you really just have to look at the sentiment for the market, right? Because if markets are gonna go well, this stock is gonna go well. But I wouldn't expect a significant dip. I mean, maybe I don't know if it's gonna go to that gap at all. No, it found support, so maybe I don't know. Just in my opinion, guys, it's maybe to 54 again at some point, but overall looking like it's in a good movement. So let me know what you guys think. Hopefully this was a more helpful video, but again, 3 stocks that I would not be mad about investing in. So let me know what you guys think, and have a great evening.